What's up, clan? IslandFX Trader here. Alright, back with another one, different scenery again. Last week we took two trades, right? One on oil, and the other one was on Euro JPY. One did not play out, one did play out. But altogether, our risk to reward would obviously make or ensure that we finish the week profitably, which we did. So I'm going to go over those trades. I'm going to show you how I could have mitigated the loss altogether on oil, and how I did actually mitigate that loss, prevent myself from hitting a full stop loss, right? How I did prevent myself from that. And I'm going to dive into Euro JPY, what I saw, and how I took that trade. So stay tuned. Ciao. Okay, so now that we're officially on the charts, we're gonna go ahead and jump right into it. We're going to start with Euro JPY. You could definitely see that they're in a chop right now. Price is moving to the upside. How can you identify that? If you go to the line chart, you could definitely see price is still moving bullishly, but it is chopping a lot in order for it to move bullishly compared to this right here. You could see for quite a few days, straight push to the upside, but they are pushing to the upside here, but they're chopping opposed to just moving all the way to the upside, right? So of course I had to look for my zone, and I saw a very nice daily zone right here, and I said to myself, I want to see either one of two things. If price pushes and closes within that zone, I'm going to go ahead and take a sell, and these lows right here would be my take profit. However, if price goes into that zone and it respects it and continues pushing to the upside, I'm going to look for a buy, and my TP would either be at the high of the daily or my famous 4-hour high. So this is the high of the daily on the line chart right here, and if we jump down to the 4-hour chart, this was the nearest high right here, and we could absolutely see that price, as soon as price tapped into that high, it dropped for a bit. Okay, so we could definitely see that that trade did play out. We could see we took a W here, but let's just look at what happened. Okay, so price tapped into the daily zone, of course. At one point, this bearish dump to the downside was definitely a concern. Of course, if you want to see price continue pushing to the upside, you would much prefer, price to trickle down nicely, nice bearish candle followed by a bullish, maybe some consolidation, bearish candle again followed by a bullish one, and some consolidation. So let me just go ahead and just draw it out, just so that you understand. So you'd want to see price do something like this, consolidate, go lower, consolidate, go lower into the zone, and then consolidate, push higher. Okay, that's what you'd want to see, opposed to a massive dump to the downside, right? An explosive dump like that to the downside oftentimes indicates that chances are price is just going to blow past your zone. But of course I had to um, look at price, well, pay close attention to price and see what it is willing to do. So after price tapped into the daily zone, we could see it chop for a bit. You could see price push above those highs that it created, the lower time frame highs. I'm pretty sure if you go down to the 50 minutes, these would look like highs. We could probably jump down to the 50 minute right now, right? Right here, we could see price swept those highs and price continued pushing lower. At that point, I wasn't too confident in the buys as yet. But when I saw price pushed higher after it pushed lower, because a week, right, basically shows that price is respecting the zone that it currently is in, right? So you could see they've been trying to push higher and they've been stuck in a consolidation. So after I see that push to the upside and then a week down, I'm thinking, okay, price really wants to sell. And if I want to see price buy, price is supposed to show me something more. And this right here, this big bullish push to the upside, after they push to the downside, showed me that, hey, the buyers are in control. Chances are that price wants to move higher. So after I got this lovely bullish push to the upside, you had price coming back down into this small consolidation which it created. Let me just draw a box just to represent the consolidation. Okay, so we could see price broke out of it and then we could see price come back into it. So when price came back into it, that is what I love to see. I was like, okay, great, I got an opportunity to get in. So guess what, I got in. But after price showed me that it was willing to push higher, I figured, I'm just going to put my stop loss below this low right here, opposed to this one. Of course, it would make a better risk to reward, which just makes sense overall, right? Because price already showed that it wanted to push higher. So I got in right here, and I think it was during Asia and London. Price just continued to skyrocket. And I think very close to New York session, I believe, I closed the trade out. And right after I closed the trade out, we could see price literally just tap the 4-hour high and then they melted down. During New York session, I was saying to myself, maybe I should go ahead and get into that trade again. But sometimes less is more. The reason why I said I should probably get into that trade again, on the 4-hour, of course, price always has to rebalance itself after it moves higher. And we could see price left behind a 4-hour fair value gap right here. Lovely 4-hour fair value gap. Of course, you'd have to take that trade on the lower time frame. So we could jump down to the 50-minute. Right. This is what I was looking for, something of that nature. Well, we're not getting a 15-minute fair value gap right here, but we did get it somewhere here. So, could have gone long right here. Could have gone long right here again, covering the low, and then targeting the high. Risk to reward wise, that doesn't even look good. So I probably wouldn't have taken that anyways. But all in all, this was the trade on Euro JPY, right? Okay, so let's move over to oil. Okay, so now that we're on oil, there's a lot of price action that took place on oil. In my opinion, the volatility of oil, is just crazy. I find oil to do a lot of craziness. In terms of market structure, sometimes I honestly feel like they don't follow market structure. But nevertheless, this is what I saw on oil. So a long time ago, when I say a long time ago, maybe a week or 2 weeks ago, I noticed on the weekly time frame Um, Oil had a beautiful weekly fair value gap right here. You could see it right here. If you were to mark it up, beautiful bearish fair value gap. And we could see when oil tapped into that fair value gap, it melted to the downside. And we could also see that oil just wasn't closing inside of the fair value gap or above the fair value gap, meaning that they were respecting that zone. Okay, obviously I did not get it here. So when Sunday came about, last week Sunday, I was like, oh wow, shoot, I could have probably gotten oil all the way up here. But nevertheless, I felt to myself that hey, if oil melted so much, we could probably get an order block trade. And this is what I saw on the 4 hour time frame, right? This was the order block, 4 hour order block right here, right? Massive dump. After small consolidation, you had a massive dump to the upside. So of course, when oil came back, or when price came back into that zone, I went short right here. I went for a sell, and at one point looked really nice. But then I realized, they wicked above, and they kind of played around, consolidated in the green for a little while, and then they pushed up, right, almost close to my stop loss, and then they melted again. And at that point, we also had news on natural gas, which is oil. And of course, when you have news coming out for pairs, right, whether it be forex pair, whether it be gold, what have you, news is basically supposed to be a catalyst, a push to whatever direction that the market generally wants to go. Now, when the news came out for oil, and I noticed that it did not dump, then that triggered something in my mind. I figured, okay, if oil did not dump for the news, chances are that they either one, they just want to consolidate, or they want to move higher. So when oil pushed to the upside, okay, and then they gave me a nice little opportunity to get out of the position, I went ahead and I I think I got out of the trade somewhere here. So my full my full stop loss wasn't hit, but that was how I was able to mitigate the loss while having a full loss on oil. Yeah. But that was basically it for oil. In my opinion, I still feel like oil might possibly dump. The only time I would probably say, okay, oil really, really, really wants to buy is if they go ahead and they take out this high right here and then they push higher up. Because at the moment, this high would be the intermediate term high. Why would it be the intermediate term high? Because you have a low on the right side and a low, sorry, because you have a high on the right side and you have a high on the left side. Okay, so this high overall would be the intermediate term high, and of course, if they break above the intermediate term high, chances are they're not looking to move lower because that high is protected. Okay, so that was it on the trades that we took for the week. Overall, a winning week, which is good. I always like to look at different traders, and I saw one of the guys. I think last week he lost about 300K in prop firm funding, which is very disappointing. I know for a fact that the market isn't what it used to be, or it isn't what it's supposed to be. But nevertheless, this is where risk management comes in, and this is how you stay in the game. So the tough times in the market, it won't last forever. You do what you have to do to mitigate your losses, so when the good times come around, those profits would easily clear off those losses. But that's it for today. I hope you guys enjoyed the video. If you did enjoy, of course, subscribe. If you did enjoy, of course, like the video. It's free of charge. Ciao.